So here we go again, more questions. Is more regulation needed to control the banks, and do the banks remain too big to fail? Joining us now is Bart Naylor. He is the financial policy advocate for the group Public Citizen. Welcome back to the show.
Thank you very much.
Where do we begin here? I thought this was resolved. Obviously, it's not resolved because we're still having questions of whether or not banks have enough controls to protect itself from losing money for itself, and let alone losing money for its own shareholders. And I guess the other question to that is the financial system itself. Let's start with the bank. Where are we on regulation?
Well, where we are is that the 2010 Wall Street reform really hasn't been implemented. Out of the 400 rules that were mandated by Congress, fewer than a third of them have actually been implemented.
Why is that? What's the
problem?
Well,
that's because Wall Street is lobbying and is successfully delaying this effort through any number of reasons which we can go into detail.
You know, it's very frustrating because the financial system is obviously needed. It runs the economy, whichever country you're in. And after the financial crisis, regulators came together. Central banks came together. We talked about new capital rules, making banks stronger so that they wouldn't fail. But this is an example, the London Whale, you talked about this before we went on the air. This happened after the crisis.
That's right.
Does that mean that we can have all the rules in the world, but if there's no one to enforce the rules, or if the bank doesn't enforce the rules, these rules really don't matter?
Well, what came out from the report issued last night and the hearing today is that we may be dealing with fraud. We know that the bank lost $6 billion. We know they admit that they made egregious mistakes. Now, what we're finding out through 9 months of investigation by the Senate Permanent Subcommittee on Investigations is that there was manipulation, perhaps, of the actual numbers. There was deceit. There was lying to shareholders. And the company went radio silent with the regulators themselves for roughly 2 months, mandated by the CEO itself. That's what came out in the last 24 hours.
More investigations likely from this?
Well, I assume there'll be litigation, if not regulatory action.
All right, let's talk about the banks in general in the United States. Are U.S. banks today better off than they were 5 years ago?
Yes, by a few percentage points, but not radically better, because most significantly, they remain terribly undercapitalized. And what do I mean by that? That's the amount of shareholder money that is at risk and is blown through if the companies do badly. And right now, it's still roughly 3%. It's as if you put 3% down on your house. And if home prices fall and by 3%, then you're out of your house.
You know what's frustrating is I covered the financial crash in great detail during that time period, although I'm dating myself here. And there was a lot of talk about this too big to fail.
Yes.
The banks today, in terms of size, are just as big, if not bigger than they were back then. What's gone wrong with this theory?
Well, unfortunately, in my opinion, Wall Street still has enormous influence over Washington, and so they have successfully delayed the needed reforms, even on the issue that I've just mentioned.
Are you blaming the banks, or are you blaming Washington?
I'm blaming Washington for being overly influenced by the banks, yes.
What's the solution?
Well, I mean, if we step up to 30,000 feet, then the solution is to take money out of politics. But we have a system in Washington that is paid for by the system we have, where Wall Street enjoys this influence. There are about 12 of me, i.e. consumer or public advocates out there arguing for reform. There are 3,000 or 4,000 Wall Street lobbyists. At today's hearing, for example, there were the JP Morgan witnesses. There were 3 dozen JP Morgan attorneys right behind them, 3 dozen of them.
As somebody that's watching from around the world, among our viewers, our global viewers, and we look at the U.S. financial markets, we see the headlines every day. The system is better, confidence is back, the economy is booming. What about the banks?
But not the banks.
What's wrong with the banks?
Well, the banks have proven, JP Morgan in particular, that they are too big to manage, that even Jamie Dimon himself, even the senior management, and they confessed this today, did not realize what was going on. What is wrong is that they have literally gotten so large. And just to insert, we learned a month and a half ago that they are now too big to jail, too big to take to trial.
Okay, well, we're going to have to leave it there. Bart Naylor, thank you very much, financial policy advocate. It's frustrating because if the economy is recovering and the banks are still dealing with this and they don't seem to be healthier, at least according to you. Thank you very much for joining us.